what has led to this kind of an outperformance in terms of the numbers, and specifically the strategy with regards to your operational guidance? How has that helped to meet that 160 crore number?
So firstly, definitely last year FY25 was a fabulous year for air conditioning business. But EPAC did not just grow in AC like at 50%, but our all our levers around diversification, both product diversification, customer diversification, something which was well executed. So we grew 100% almost in the component business. We grew 22% in the SDA business, and then the newer introduced the large domestic appliances like coolers and all, which was introduced only last year. So 25 we saw that also increase. So we have substantially reduced our overall customer dependence on top customers from almost 72% in FY23 to 48% in FY25. So on all aspects, be it product diversification, customer diversification, all the strategies we had planned had worked very well. And this is why the asset turn also has improved for us from almost 2.6. We have achieved an asset turn of 3.2. So going forward, definitely we will keep focusing, and the strategy is to keep growing in other businesses and to keep diversifying while maintaining the pace of growth in the AC business.
Right. Ajay, one of the strategies that you've looked at is in terms of reducing your exposure or the contribution of revenue that comes in from room air conditioners to other products. From what you're looking at in terms of reducing it from 80% to 65%, where do you stand currently, and what are the product segments that you are going to introduce?
See, reducing dependence on AC does not mean we don't intend to grow. So AC will continue to grow at outpacing the market growth, but at the same time, our other business growth, whether it is the small domestic appliances, the newly introduced washing machines, and the cooler business, the component business, so all others we are focusing to grow them at double the pace or triple the pace of the AC growth. So this is how we are reducing our overall dependence on AC, and at the same time also trying to maintain a uniform business every quarter. So that's the objective the company is following right now.
Okay. No, so agreed. I'm not saying that you're not going to grow your RAC business. The question is, if the other segments also come in, where does that stand currently in terms of overall revenue share, and how margin accretive are those other segments as compared to RAC?
Last year, FY25, our overall AC contributed 74%. So we come down from almost 85% to 74% in last year. And going forward, we are guiding that we will further diversify, and AC will contribute 65%. So that's the overall guidance we have given.
Okay. And taking into consideration your capacity utilizations, where do they stand for RAC, and how much of the capacity now is being utilized for your small domestic appliances as well as the large domestic appliances for the remainder?
The good thing for us, most of our investments in capacities is into manufacturing of the parts required. So these parts can be used for AC or any other product. So all the investments except the assembly lines are fungible. So herein the focus is, like I shared earlier, is to diversify as much as possible so that the utilization during the off-peak AC season improves. So the overall objective has been to improve the utilization in the off-peak AC season. And this is why we are repeatedly saying that we'll continue to focus on growing our component business, the large domestic business, and the SD business. So while AC, during the peak AC season, definitely the utilization of the assets is close to 100%, 95, 90%. But it is the off-peak season or the off-peak AC period which definitely challenges us in terms of asset utilization. So this kind of activity, their overall, I shared earlier, from a 2.6 asset turn, we've already achieved 3.2, and going forward, we are further looking at bringing it up to 4%.
So Ajay, just to understand this correctly, one, RAC, which has been the core business, now you're looking at ramping up your RAC component portfolio as well, and that automatically looks at backward integration in terms of manufacturing. Correct me if I'm wrong anywhere on this front.
Yeah, you're absolutely right. Just to add on, so the components are not just for AC. The components are well for the other products like the washing machines or refrigerator, and the component business in terms of the PCBA controllers. So it is component for any appliances manufactured. So our focus, we are also doing component for energy meters. So our focus is to look at business which can give us substantial revenue during the off-peak AC season.
Got it. Apart from that, when you look at the domestic appliance business as a whole, inherently it's a high margin business as compared to the room air conditioner business from a margin perspective. Now that EBITDA has been at 160 odd crores this time around, when you increase your or reduce your RAC to revenues from a 80% to a 65%, how much will it actually impact your margins on a positive end? Further expansion that we could look at in terms of FY26 and 27?
Definitely, first of all, I like to again say we are not reducing the AC business. We continue to grow. At the same time, the growth in the other business is outpacing the AC growth definitely. So overall, yes, the revenue mix and the margin mix is changing. Although last year we took a dip in the margin compared to FY24. That was basically because of the low utilization of City City, the new facility. So as our utilization of the other facilities and the utilization overall throughout the year improves, we definitely looking at increasing the or improving the EBITDA. So from current year 7.25, we are definitely looking at a higher 7% kind of an EBITDA for the next year.
Okay, strong set of numbers from EPACK Durable and a stock to watch going into the rest of the day's trade as well. It has lost ground from the early part of the session today.